Hi, John. Hi, Danny. Thank you for coming. It's a pleasure. We have here two VCs with very different model of investing, and I first want to ask, there's a lot of talk in the Valley and also here about the disruption. Do we see also this disruption in VC? Is our crowd and other forms of investing is the new model or still Viola Ventures and Viola is still the model? What do you think, John?
I mean, we're still a small part of the market. We happen to be the most active venture investor in the country by far at the moment. And we've come from nothing with a different model for sure. But we are still, compared to the overall VC market, maybe 5%. So the market is still Viola. I mean, Viola, I think, last I looked, you guys are managing $3 billion?
$3 billion and growing.
And growing, okay. So we're not here to screw up anybody's successful business. All we want to be is a good partner and allow large numbers of people who've been frozen out of this to participate, okay? And I think that's a good thing for everybody.
Danny, do you think, as we saw, there is also different kind of models, and there's Horowitz playing the different SoftBank with the joint. Do you think we're seeing a disruption of the VC world?
First of all, I think the VCs, what's called traditional VCs, have changed dramatically since we started in this 20 years ago. So I think the model has been disrupted. I think the reality is that entrepreneurs, the successful entrepreneurs, actually prefer to go to established VCs that work in the same old traditional model. So every time someone came out and started to do something that's a little bit new and different, I think it attracts a certain type of the entrepreneurs, but not the top 10%.
That's where I'm going to disagree, okay? Because I think that, first of all, the model, as you said, is changing, right? Is SoftBank the traditional VC model? Probably not, right? Because no one ever dreamed of trying to manage $100 billion, and they're attracting wonderful entrepreneurs. I know that we, are investing with everybody, yourselves included, and the entrepreneurs who we're backing are top-notch, But I really think that the need to bring new money and new resources and new ideas into the VC model is important. And I think the word disruption might be a little bit harsh, because that implies that, always that the business model changes and the existing partners lose and there's a winner and a loser. That's not the case. I just think that bringing new forces, and yesterday I was sitting with a guy who, I've known forever, but I didn't know he was investing here. And he said, yeah, I just put together an SPV on my own, bringing $12 million into a healthcare company. And I said, have you ever invested in Israel? He goes, no. And all of a sudden, this kind of money, and by the way, he's a very smart investor, who invests in public stocks. But the need to bring in kochot hadashim, new forces, I think is huge. And I think it's a good thing for VCs, a good thing for entrepreneurs, and I think you're going to see a lot of it.
Yeah, so first of all, it's more money right now in this environment for sure is a good thing. I want to say SoftBank is a major force in the industry, much more in the later stage versus the early stage. Early stage, I think, looks a little bit less disrupted in that respect. I think it'll be very interesting to see what happens with some of the new models once the environment changes a little bit. I think that could be a challenge. But I do agree that in a world where tech is so dominant and so many people want to participate, we definitely need to have more vehicles and capabilities than just the traditional VCs offer.
When you're talking about seed, and we saw a lot of talking about it, but I feel both of you are also investing in very early stages. Are you not afraid that we are going into a stage where Israel is going to be only $100 million companies and R&D centers?
Yeah, but I mean, that was Hanan's presentation, which I think was incredible, and I think the statistics that he showed with the decline of number of new companies, and he mentioned that, I think that's a frightening point for us.
Do you see that you see less companies coming to you, less attractive companies coming to you?
So I think actually there's one point I would say. we see less companies. I'm not sure about that. What we are seeing is that I think a little bit higher concentration in certain areas. And I think one thing that was beautiful in Israel was that we had a little bit in every category. And I think we see a little bit of over-concentration in cyber and AI and some other areas.
Autotech?
What's
Too much autotech, maybe?
Maybe, yeah, I mean, that was a little bit of a trend of 2 years ago, maybe less so these days. And I think it's really important for our country and for our tech ecosystem to have a lot more startup company early stage in a very diverse set of areas.
Do you feel the change that we see? You're seeing a lot of early investments, very seed and early. Do you see this change that we suddenly see less and less of them?
This is an opportunity. Okay, I don't think it's a
opportunity
crisis.
is good, but if you don't have something to invest in it, there's no opportunity.
Look, I think Hanan's data was very, very important and should be a wake-up call. But it should be a wake-up call to people who want to make money, right? In other words, I'm a capitalist. I believe in the power of the market to correct itself. And clearly, there is an arbitrage situation here where there simply is not enough money for good seed deals being deployed. So, you know, if you've been reading the papers like Khalkhalist, you've noticed that we're doubling down on incubators. We have already one incubator. We just won another Mihraz in the north to do food tech, so that's clearly not, I mean, there will be some AI or better yet, machine learning elements in the food tech, but we're doing food tech. We've got a new initiative, believe it or not, to do pet technology, okay? At our crowd, we do everything, right? We've got 18 different funds that we're backing. I mean, I just talked to a good friend of mine who said, wait, you're doing funds? And yeah, we have invested in 18 different venture funds because we're believers in that. Okay, we have a growing set of incubators, and we want to be investors from the earliest stage all the way to the later stage. We just did a big American deal called Beyond Meat, which has been the hottest IPO of the last 20 years, and we were in, and all of our investors who came and joined us were in before the IPO. So we're all through the ecosystem.
You've talked, Danny, about the cyber, and as I looked at your portfolio, there was none. You don't have cyber. It's like, you know,
we have
it's
one.
like, okay, one. Other here, other investors here have a lot. Is it intentionally?
So
do you think cyber is...
Look, we still believe, and there was some discussions today about billion-dollar companies. We think that our model, we have a fund that's over $200 million. We need to make returns. To make returns, we need companies that are worth north of $1 billion, maybe 1, 2, 3. That's what will make us the return. And that return is extremely difficult in cybersecurity. It's very competitive. Those companies usually are sold for technology and not business, and they get to a valuation of 100, 200, 300. And it's really, really hard to scale. And we don't think that will have, or move the needle, have an impact on our fund. So we're just staying away. We're looking for areas where we think we can really get to those dramatic returns.
Do you believe in this? Do you agree with Danny that cyber is not a place for creating $1 billion companies? Do you think we can create?
I do not agree. Okay, and by the way,
we like each other.
We love each other.
Yeah, exactly. And we sometimes do agree. I remember last year we agreed.
Look, we're very committed to cyber. We have, I think now it's like 12 or 14 companies. I can't count because we have 170 portfolio companies. We have another 100 portfolio companies through our funds, and we're doing about a new deal every week. So, and please send us your deals because we'd like to do more. But
the week is not over yet, so...
I just met a couple of really interesting ones.
I know.
We don't have... This is one of the beauties of doing a new model, is we don't have to make a fund returner, right? For us, I mean, and this, by the way, people need to understand how your investors think and what their expectations are. And if you don't understand that when you go to a Viola or an Aleph or any one of the, or Patango who was here, any one of the top funds, or Cornerstone, okay, you need to make sure that your fund has the potential, or Glilot, by the way. I don't want to, of course, now I'm leaving people out. But you have to make sure that your company can return the entire fund, right? If they don't see that their 1 million, 3 million, 10 million investment will potentially be a fund returner, they're simply not interested. Okay, true or not true?
Very true.
Okay.
But
now, wait.
I have a but.
Okay, I'll give you the but in a second. We don't have that. Why is that? Because we are a platform. So if we see, for example, like Beyond Meat, we got into Beyond Meat before the IPO. You know, our shares are up about 7 times on their money, and we invested.
Congratulations.
Yeah, thank God, millions of dollars. That happened in about 6 months. But that was a great investment for us. We said, yeah, that's not. We don't have a fund. It's not going to return the. You know, we're managing $1 billion and change now. It's not going to bring us back $1 billion, but it's a good investment. We make it. If we see a company which is a good 2x or 3x or 4x, we make it. Okay, and that's a different expectation. So the entrepreneur, when they pitch in our crowd or they pitch a Viola or another fund, you have to understand where the investor is coming from, what he's looking
Then he has a but.
I think it's 2 things. One, first of all, it's amazing. Entrepreneurs should definitely understand what are the expectations by their investors. And when they come in, what they want, we should understand what they want, and they need to understand what we want. Absolutely, he's right. We are looking for fund returners. My only comment is as follows. My youngest daughter is an amazing girl. One day she's going to be the prime minister of Israel, but she's not ready yet. Okay? What I mean by that is that companies, we don't have to see the billion-dollar story right off the bat. We need to believe it's there, the team, the vision or something. But first, you got to do first grade, second grade, third grade. You got to do college, and then one day, hopefully, you become a billion-dollar company, right? So we have patience, and sometimes we don't see it right off the bat. But overall, that's our expectation.
Yes, we see. We have a couple of companies that are almost on being.
Almost? What do you mean? Almost 2 billion. You're right. We have a few companies that are almost 2 billion. Iron Source, Payoneer, Outbrain, Lightrix, just name Redis Labs, just name a few of, I think, some of our fantastic companies, and some of them are with our crowd, so we can't complain.
We talked a bit about, are we in a bubble era? Are we in this? And you're, as you said, you have 100+ companies, and I talked to you before, I said you are bullish. But aren't you some kind of, I'm asking both of you, afraid a bit that we are getting to a situation where too much money has gone into. Aren't you afraid of this situation? It's not. You've been in the bubble.
I've been in this business.
You suffered from the bubble.
Long time. I've been here. I raised money for my first startup before there was a single venture capital fund in Israel. My first fundraising was done in 1985. So that shows you how old I am.
He was 15.
Yeah. I still feel 15. The situation is really good now, okay? And there's no guarantee that when things are good, they stay good forever. But they are really good now. We've never had more interesting deals. The trends, the secular trends are so strong, okay, in terms of the technologies around digital health or cyber or marketplaces or the cloud or AI. These are real. So if you were an entrepreneur and you were saying, well, you know, should I start a company now or should I wait a couple of years? Right now, okay, right now is a great time. Now, we might hit a speed bump next year. Who the hell knows? But in the meantime, things are great. We've got 50 companies valued over 100 million. We have 5 unicorns. We've had 35 exits so far, okay? So, you know, let the good times roll, okay? Let's hope the best.
Oh, let the good times roll for sure.
But don't you have some kind of, I don't know, anxiety or feeling that this good era is going to end?
Yeah. First of all, a bubble I think is defined by inflated valuations, and I think it happens sometimes, but I don't think that's the reality. I think what really is scary to most people is that we've been in the good times for over a decade. That hasn't happened for a long time, or we don't remember that. And you kind of, we know that it's supposed to end. So we're like, it's going to end this year, it's going to end this year, it's going to end this year. Every year is the year people say it's going to end. I actually don't think it's going to end this year. I think we're probably in a good position, at least till the next presidential election in the U.S. We'll see.
Okay, thank you very much, gentlemen. Thank you very much for your time. Bye-bye.